Hello, and welcome. Today we're going to be talking about investing mistakes to avoid as a beginner investor. The first thing almost every beginner investor tries to do is time the market. Timing the market never works because stocks are incredibly unpredictable and hindsight is always 2020, and past events do not lead to future trends. So instead of trying to time the market, a good thing to practice is dollar cost averaging. Dollar cost averaging is regularly buying a fixed amount of the same asset. So once a month or once a week, you're buying the same amount of the same stock and you're reducing your risk that way. It's in human nature to try to predict what the future is going to hold, but when it comes to stocks, it doesn't work. Stocks are volatile and unpredictable. If we could predict the future, there would be tons of millionaires just from the stock market. The next major mistake a lot of beginner investors make is not doing proper research into the companies you're investing in. If you want to invest in a company, you need to know how they make their money, what they even do, what the company is. How are you going to invest in something that you don't understand at all? It's kind of silly to think that you're going to make money just blindly investing in any company somebody tells you to. And that kind of goes hand in hand. When you trust the wrong sources, you're going to lose your money. By not doing your own research, you're really hurting yourself in the long run. And just like I mentioned before, stocks are unpredictable, so even seasoned investors make bad calls. So if you're listening to your favorite YouTuber and they tell you to buy this stock and you buy it and you lose all your money, it's kind of your fault because you didn't do your own research. So make sure you're always doing your own research into companies that you're investing in. And that's another hard thing about investing into individual stocks is that you have to do that research or you're not going to make money. And if you don't want to spend all your spare time researching individual companies to see the next big moneymaker, you can do long-term investments like ETFs, the S&P 500, index funds, mutual funds, things like that are just safer options compared to those of individual stocks. Another mistake of beginner investors is not investing in safer long-term options. Like I mentioned before, the index funds, ETFs, bonds, those are safe long-term investments. A lot of people want the get rich quick, get rich overnight, the next big Bitcoin, the next big stock, and that's just not gonna happen most of the time. Most of the time you'll put money into these stocks and it'll go down instantly because it was only up because of the hype. And again, that's why you need to do your own research to see if it's up because of the hype or if it's up because of its financial health and its risk association. Let's use the S&P 500 for an example. The S&P 500 yields over 10% annually. So you're making money, but you're also diversifying your portfolio and not just investing in one individual company. You're investing in 500 of the most successful companies in the United States. And for those of you that don't know, the S&P 500 is a basket of stocks, so it has 500 of the United States large cap companies, things like Facebook, Apple, Microsoft, and other very successful companies in a wide range of industries. And this is so important. Stocks take a long time to learn, and it takes an even longer time to become a good investor. And like I mentioned before, even seasoned investors make bad calls. So just because you know stocks doesn't mean you're going to be a millionaire. All right, another thing to avoid when you're first starting out investing is day trading. So a day trader really just takes advantage of the high volatility of the stock market. So they buy a stock at the beginning of the day and they sell it before the end of the day. Day trading is just extremely time consuming, and it's pretty much a full-time job that rarely ever works out in your favor. I mean, you can look it up, but I'm sure 90% of the people that have tried day trading do not recommend it. I personally have never tried it and I don't recommend it. Day trading has a lot of disadvantages. It comes with high transaction fees, high taxes on capital gains, and a lot of time commitment. Most people just do not have the time to day trade. You need to be looking at your phone, looking at your computer all day to sell that stock right when it hits the right point. It rarely ever works out in your favor, and I do not recommend trying to day trade, especially as a beginner. I do recommend, however, long-term investments like the S&P 500, index funds, and ETFs. You're going to get sick of me saying it, but you need to invest in long-term investments. Those are the money makers. That is how you are going to build wealth rather than get rich quick. And a benefit of long-term investments is if you hold it for over a year, the tax rate on capital gains held longer is significantly lower than short-term capital gains. You could be paying 0% taxes on those gains, or 12% depending on your income tax, but you could be paying 0% compared to paying your normal tax rate on short-term gains. The last mistake I see a lot of beginner investors making is waiting too long to get started. It's never too late to get started investing, but you have to start, and you have to start somewhere. You're gonna make mistakes, so don't overanalyze and try to be a perfectionist, get it right your first time. Just put your money in the S&P 500. Easy, you don't have to do anything, just check on it. But you don't have to do any research, you can just put your money in the S&P 500. The sooner you start, the better. And you don't need to be rich to invest. You can invest a small portion of your paycheck each week, each month, just a small portion, and starting those good habits is what's really gonna build you wealth. And remember, you have to pay yourself first. So whatever that means to you, if you wanna invest, if you wanna learn more, expand your knowledge, make sure you're paying yourself. And also make sure you're being smart about it, because if you're in crippling debt, maybe swimming in loans, maybe don't invest a good chunk of your paycheck. As soon as it's right for you, you need to start investing. But make sure you're not taking way too long to get into it, because the longer you wait, the less money you're gonna make, obviously. Because I preach the long-term investments, so they do take time. Anyways, guys, I hope you know what to avoid as a beginner investor, and hopefully you can get started as soon as possible. Hit that like button if you learned something. Drop a comment on which one of these mistakes you might have made or would have made otherwise. And don't forget to subscribe. Follow me on Instagram and TikTok. Links in the bio. Thanks, guys.